for you,
Good
Gary?
morning. How are you?
Good morning, good afternoon, everybody. Welcome back to VCTV, another episode of VCTV. I hope all of you had a great weekend, good time to relax as well from the busy. We are working round the clock, all of us. Like Gary just woken up in Miami, Florida. I think it's not even 7 a.m. there, Gary, right? So yeah.
5:30.
Oh, geez, 5:30 in the morning. That's a total. But anyways, thanks for joining us today. It's a Monday. And let's start our Monday discussing a very new topic on my session today. It's about family offices. We talk about VCs, we talk about private investors. Let's talk about family offices. How are family offices helping startups grow by funding them, by mentoring them, and all that sort of things. So before I start introducing my speakers of the evening, I'd like to introduce myself. My name is Sunny Mohanty. I'm the regional director of LaToken VCTV in Singapore, and I host VCTV every day. Great, that's me. Awesome, fantastic. So we have Maren from Singapore, Stanley from Africa, and Gary from Florida. So Maren, let's start with you with your short intro and background. Thank you.
Hello to everybody. My name is Maren. I'm spearheading our family office and Schweizer's growth capital arm in Singapore. We've invested in 32 startups in the last 4 years. Our business actually dates back 1849, so that's some time. Me personally, I did a lot of things, including co-founding my own companies. I hold an airline pilot license, a master's of engineering, and a doctorate in economics. So it's a little bit of everything. I would call it kind of the Lego.
Oh wow! Did I hear pilot license or something?
Yeah. That's been my passion. So yes, I was so much into aviation, and that's where I also started my career. So you could say from piloting to piloting companies.
Wow, what a shift. Thank you, Maren, for telling us this on this episode today. Really interesting to know that. Thank you and welcome back. Next, I have Stanley from a very sunny place. Where are you calling darling in from, Sunny? Sorry, not Sunny, sorry, Stanley.
I'm actually dialing in from a little town in South Africa in the middle of the Karoo. And currently it's about 34 degrees, so I couldn't stay inside. So I had to come and do this call outside. Of course, my name is Stanley Anyete. I'm an investment officer for an investment bank called Triodos Investment Management. One of the investors into some of our funds are family offices. And I also used to be head of investment for a family office focused on impact investing. So this subject is also very close to my heart. Thank you.
Oh, South Africa, interesting. Maren, Singapore, I Singapore, Stanley, South Africa, and then we have Gary. Hi, Gary. Good morning, 5:30 a.m. in the morning. Wow.
It's normal. I'm used to it now. It's
How
great.
was your weekend? How was your weekend?
That was great. Really good. Yeah, really good. It was warm and bike riding, the typical things that you do on the weekend. Bike riding, hanging out, rebuilding bathrooms, the typical stuff. So it's great to be here with friends. My name's Gary Fowler. I'm a serial entrepreneur and investor. I love AI and quantum computing. I am in Palm Beach, Florida, actually at the moment, but normally I'm in Silicon Valley. My office is in Santa Clara. I built 17 companies, have had 2 exits, 2 companies, Click Software, 1.35 billion, sold to Salesforce, and also Eva.ai. That company started 5 years ago, almost to the day, actually, 5 years ago. It's amazing. And it's a top AI HR tech company. Now I'm the CEO, co-founder, president of GSD Venture Studios, a premier AI and quantum venture studio that curates companies from all over the world. In fact, where Stanley is today, I've got 3 African companies, a couple German companies, Australian, Argentinian, one in the UK, just all over the place, Russia. So we curate them, and their goal is to create unicorns. As people say, they always want to strive to be a unicorn, but a unicorn is a mythical creature. Our job is to make them real. So that's me.
Sure. Fantastic. Thank you, Gary, for that fantastic introduction, as always. Okay. About the topic, it's about family offices. So, since we are touching up on this a particular topic, we always talk about VC investments on our panels. Let's talk about family offices by defining them. So who are these family offices? Let's just start by the definition of a family office itself. Maren, let's start with this. So how would you define a family office before we dig down into the investments they are interested to do?
I would want to look at it actually from a CVC perspective, so corporate venture capital firm, and then there can be more integrated and less integrated. So talking for our family offices, we are more on the venture building side. So we are building ventures, we are entrepreneurs ourselves. And then I would say there's also the hybrid category of family offices, which are running more than like a financial VC, purely on wealth appreciation in a long-term perspective.
All right. Thank you so much. Stanley, your insights, your views on that.
Yeah, I mean, just exactly as Maren explained, I think family offices are, in a way, a more flexible funding institution where they can actually take a little bit more risk than the normally structured institutions. And I think, they've got a lot more freedom. And I mean, family offices are just exactly like an investment institution with much more freedom in terms of lack of regulatory oversight to actually take the more risky investment. So I think, like, if you look at startup ventures and if you look at, more innovative ventures, I think family offices are always the first point of call due to their ability to be more risk-loving.
Yeah, thank you so much, Stanley. Gary, your turn, please.
Yeah, I mean, so what I see is I think it's an untapped opportunity. So think about it. I mean, it's basically the family's money and being able to do what you want. The one thing about it is really interesting. And by the way, Sonny, I've met a lot of family offices on your show, just like Maren's, is that there's a lot more, Stanley said, a lot more flexibility. And it's a very closed community from my perspective. It's not like you can go out. You can see a list of thousands of family offices, but it's really, you need a personal introduction from my perspective to really get the traction in those family offices. And then once you start into it, as Stanley said, there's a lot of flexibility. And again, the idea is to build multi-generational wealth within the family. But then you'll find family offices are really interested in things like I'm working with one of them right now on artificial intelligence and quantum computing. So incredible opportunities. But the key is to how to find them and how to get in and build the trust and credibility. And that's not so easy.
Right. Interesting. So I hear that flexibility and also they're not easy to get hold of. So how are they different from a venture capital?
Well, they're easy to get to them, but the thing is to get in, it's different. I mean, you're dealing with some of the wealthiest people on the planet, right? When you have somebody worth $50 billion who called a couple of days ago and he wants to do a deal, it's a whole lot different than dealing with your friend down the street, right? So it's just a different kind of, it's interesting. And in some ways it's a lot like Silicon Valley, quite frankly, because we're pretty open there and you can deal with some of the most successful people on the planet, one-on-one. It's interesting. But it's a whole lot easier to get the funding for them because they're targeted and they know the kind of things that they want, and it's their money. So if I take my money and I want to invest in something, it's a whole lot easier than trying to go to venture capitalists and dealing with somebody from, some top tier university and trying to convince them to do something. I don't know. They're more passionate, I would say, from my perspective.
So yeah, I just wanted to ask, how are they different from an angel or a VC? Then why do not we see many family offices investing into the startup asset class?
Yeah, sorry, Gary, do you want to take this?
Well, go ahead, Stanley.
It's also because, don't forget, I think most family offices, they actually have, if you look at an angel is one individual that is looking to invest. But if you look at their family office, it's a transgenerational transfer of capital. So there's a bigger accumulation in the family office than you find with the angel. So I think with the family office with the family offices, you have more, if I can say, there's more variety than the angel. And also one of the things that Gary talked about is about passion and network. An angel will be looking at something that they can be involved in, or they can actually move their needle, where family office will be looking at passionate, how does it fit in their family's kind of viewpoint, rather than the individualistic view that an angel investor will look at. I don't know if you want to add on to that, Gary.
Yeah, no, I mean it's the same thing. The other thing is you're dealing with. I mean, the one family office I'm dealing with has like $4.9 billion. One of the guys that I'm dealing with, he just in his checking out has close to $5 billion. $5 billion. Well-known individual too. So I mean and I got introduced, Sonny, by somebody on the show, by the way. Right. So what happens is they just have enormous wealth, but at the same time, the reason I really like to deal with the family offices is because they understand. Many of them understand what the current technology trends, because they're just like Marin. They're on these panels a lot, just like Marin is, and they understand what the trends are and they know what to invest in. So it's a lot different than dealing with, angel investors do not, and I'm an investor too. I mean, we put money in, but I'm not putting in, personally putting in. We put in quite a bit sometimes, but we're not putting in, $15 million, $20 million. So they're just a bigger check sizes, and it's interesting because it's a whole network. And once you get into one family office, the connections are to the other family offices because they know each other.
Okay, so
I'd like to jump in here. I think many family offices, at least ours, have a very wide scope. So we are a CVC, corporate venture builder. We are also an accelerator. We are an incubator. We are running co-investments, co-innovations. So it's a very wide scope. Many others, they have a more narrow scope. So I think that's one advantage of family offices. And I would want to agree with Gary. You need to get in, and then you are in a kind of network environment, family office ecosystem. And yes, family offices like doing syndicated deals. So we invite and introduce others to follow us.
Okay, so if I understand correctly, so ticket sizes are a lot bigger when it comes to investment. So are they also looking for a similar ROI, what a VC would be looking at? So do they take bigger stakes into the equity of a company when they invest? So what's the investing model like?
With family offices, it's more negotiable. Because I mean, if you look at, for example, the VC is almost like it's like the private equity where you have your LPs who actually make the rules in the beginning of their fund setup, where sometimes it becomes too rigid for you to actually negotiate, given the particular and the characteristics of your business. With the family offices, is the individual principal that actually sometimes takes the decision. So it is much more, and I use the word again, which I used in the beginning, flexible and more negotiable with family offices than I think with the established funds, which the VCs, if you think about it, are.
Right. So how are these family offices accessible to the startups? Because I think it's not that easy to reach out to these wealthy people, right?
I mean, it's so I can only tell you my own experiences right over the last year. So I met somebody. I mean, this is directly how I did. I met somebody here who happens to work with a guy that works with Richard Branson. I met with that person that's the head of the wealth, that it's his wealth. We hit it off. He introduced me to one of the wealthiest guys in Dubai, right? Who in turn introduced me to people in New York. It's just like a web. I mean, it's unbelievable. And the thing is, if you find people that are in the same vein, that have the same passion, we like AI and quantum computing. And of course, everybody wants to make a high return, We have some of the best companies in the world. It's like a match. And so you have people that are directly interested in doing. It's not like you don't waste a lot of time. Let's just put it that way.
Right.
You don't waste time, and you're talking about enormous opportunities, right? Because everybody's on the same page. I mean, of course, it's about the returns, but it's also about the passion. I would say it's probably the same level. The passion is really important. So, and then they're connected with each other. So they do the deals by, just like Maren said, I mean, they syndicate deals. They're friends, right? I mean, it's like being down here in Palm Beach. You walk up the street and you see Bill Gates and literally Bruce Springsteen, all these folks, but they also do investments. And sometimes they do investments together. So it's getting in. It's a different level of getting in. You're cutting through a lot of red tape.
Right.
Just like Maren's here today, right? So, I mean, Schweitzer family is a huge family office in Germany. I mean, just look at it. It's exactly right. This is exactly how it works. Just like today, Sonny. It's like you're asking about the question with exactly somebody that's here, right? It's kind of odd for me. I'm kind of laughing because I'm talking about something she's already doing. And hopefully I have my own soon.
It's for the audience, Barry. It's for the audience to know what exactly who they need to reach out to. Maren probably would be flooded with messages and emails after this. So watch out.
Yeah, please do so. Go to our webpage and then you can click there.
I think that is one of the disadvantages of the family office is the ability to get in. I mean, I think working at the family office, I've actually found it difficult for to actually understand how entrepreneurs could get in, because you cannot just, you have ones like Marian just said where you can send emails, but mostly it's about networks. You got to know the right people in order to be introduced. But the minute you get in, it's much easier to meet other family offices. But the initial breakthrough, I think, is one of the biggest challenges that most entrepreneurs will have. And with the VCs, it's much easier because with the VCs, it's an institution that is always looking for portfolio. But with the family offices, they're not really looking for portfolio, but something that extends to their kind of family and generational ideology. If it's not there, it's fine. The money will still accumulate. But with the VC, they're forced to actually make the money consistently, so they always are there looking. And I think that's one of the main differences between the two and the biggest challenge for entrepreneurs when it comes to actually breaking into a family office circle, I think.
Yeah, wow, that's nicely explained. So I would like to ask Maren a different question. So let's talk about some of the recent investments, Maren, your office has made in the recent times. Let's talk about 2020 and why did you decide to invest into these portfolios?
We always look at the market dynamics, and we look at the team who's running the show, beside typical topics of a due diligence. That's standard. So I would say we are pretty structured while still flexible and entrepreneurial family office. So it's both ways, actually. So just to come back what Stanley said, yes, it's difficult to get into it. We've decided to actually run on a systematic approach where you can just chip in your deals, running into a process, and get feedback. So it's not kind of knocking the door all the time. Back to your question, Sunny. We only did one investment in 2020. Why? First of all, it's up and running. So we invested into a telemedicine health tech company in Southeast Asia. And then we kept our funds to help our existing portfolio companies if they need to do some bridge financing. So that's been the rationale. And it's probably a very family business-like style. We don't have this pressure to continue investments, to find a dragon in our portfolio because maybe the fund didn't do so well before. We decided, okay, now it's focused, and we keep our funds in our portfolio companies later.
Yeah, so Maren, if I hear that, if I heard you very clearly, because I think there's a little bit of I don't know. It's breaking up a little bit for me. So you recently you didn't invest in anything. You didn't invest in 2020. Did I hear that clearly?
No, that's not correct. So we have a total of 32 investments during the last 4 years.
Right.
One investment, a syndicate deal in 2020.
Right.
And we actually did it slower in 2020 to keep our firing power, to help our existing portfolio companies if they need bridge financing or ensure they're running in difficult times.
And you mentioned about health tech as well, right?
Yes, our investment is a health tech deal.
Right. Okay. Got it. Thank you. Thank you, Brian, for that. Stanley, yeah, same question to you as well. So, any recent investments into any specific sector?
I mean, most of the recent investments that we was currently made was made more into the sustainability sector, because most of the family offices, I mean, don't forget, these family offices are established as an offshoot of traditional businesses. So most of them are also looking to actually get into the sustainability sector in order to balance, if I can say, the good versus the bad. So, I mean, most of the investments that were done this year was more into the sustainability sector, into the renewable energy sector, quite a lot in the renewable energy sector. But like, Miriam also said, most of the year was actually spent financing existing portfolio companies, because, I mean, like, given what we just experienced in the world in 2020, there's kind of a reshift. And families want to hold on to their liquidity just to ensure that, come the worst, they do have some dry powder to actually initiate. So I think 2020 is a bad comparison, but for 2019, I mean, there was about 20, just like Miriam, there was about 20 transactions done in 2019, but 2020 was a big turnaround where we were trying to support those 20 rather than trying to, open up a new vertical.
Right. So which sector, sectors were these? Like in
well,
the
Sorry, I cut you off. I'm being rude. But it was more on the renewable energy side, because, I mean, if you look at it, there's more reliance on home energy, because now people are working from home. So there's a lot more pressure on the infrastructure for home energy. So there's a lot of solar investments that have been going on in 2020, to be honest.
19 and 20. Okay. Yeah. Sustainability and energy sectors. So I read somewhere that sometimes you wouldn't find family offices' contact details. Even sometimes they do not have a website. So why would that be? So Stanley, you can take this. Then I can go Gary and Marin.
I think, I'm going to speak from the Netherlands perspective, because, I mean, that is where mostly, I understand that's where mostly my experience in the family offices are. It's about privacy as well. It's about privacy because, don't forget, most of these family offices want to keep their, if I can say, their things quite private, because they don't want the rest of the market to know exactly how big these families are. So you don't normally find it because they just want to keep the privacy and they just want to act within the network. Like, Marin was saying, it's much easier for them to jump on a syndicated deal than actually advertise to say, bring your organizations and we finance it. It's all about privacy when it comes to that.
Interesting. Thank you, Stanley. So Gary, recent investments from the family offices that you represent in 2019, continuing 2020.
Yeah, I mean, the thing is, so we're working on a huge deal, and I can't get into a lot of details about it because there's some regulations around one of the things we're working on. But it's been, from the start to finish, it's 6 months, and you're talking about over $100 million opportunity. So it's that's the biggest one that we're working on because it's taken a lot of my time, quite frankly. And it's a focus on AI and quantum computing. But like I said, there's some regulations around it. But it's one of the it's a syndicate of family offices that are behind it, and it's all focused on AI, unsupervised AI, and some quantum computing and cybersecurity. But Yeah, it's taken less than 6 months.
Wow.
less than 2 months, actually.
Wow. 2 months.
That's how much. I don't know. I like the term dry powder, Stanley. You know something? I think of the Revolutionary War or something every time somebody's dry powder. But these people have a lot of dry powder. And also not only sustainability but impact, Stanley. That's the other thing I hear a lot, right? The really is if you have an impact edge and it's something interesting for them. So in my particular case, it's because AI is they look at AI as the new electricity, that it transcends so many different vertical markets and it's so powerful. And then quantum computing because of the potential impact to everything. So that's why they invested in my project.
Wow.
Or I
Interesting.
should cross my fingers in a week.
Wow. Something coming in a week's
In a
time.
week,
Fingers crossed for sure. Yes.
Yeah, no, it's really interesting. I mean, when you talk to somebody that's got $5 billion in a checking account, that's insane, right?
Yeah.
So you're talking about that kind of an enormous. It's like being here in Palm Beach. I mean, quite frankly, they're actually the same people a lot of times. But what happens is the reason I like it is they're so passionate about it, and the family members have their own. I had one of the wealthiest families in Asia who actually worked with me for a while to learn about entrepreneurship, and they're passionate about certain areas. And if you hit those areas, it's a win-win. It's your money. It's just like when I started my fund. I mean, it's my money going into different companies, right? It's so. It's like when somebody says, "Oh, what kind of investments you make?" Well, it's things we like. So it just happens to be, a couple of my billionaire friends and me. They're the whales, and I'm the minnow.
Right. Got it. Thank you, Gary. So I've got this next question because it's very interesting discussion we are having right now. So, Marianne, what startups do you pick up which will be right for your family office or for the families that I mean, obviously you are the family, but I'm going to come to Stanley. So what are the criteria for you to pick up a startup which is going to be right for you, for your portfolio?
Yeah, very good question. So first of all, we are not a multi-family office. We are a single family office, which is less complex. First of all, we've structured our investment scope into 3 verticals. One is electronics. The other one is digital. Digital is a very general term. We do have our subcategories, which we prioritize, as I just shared. So 2020 was health tech. And then we do have mobility, because we believe that electronics, and we are a lot in automotive electronics, and digital will merge in the future, and there are a lot of places to go. We believe in data is the new fuel, and the electronics vertical is more a hardware business. And then it comes actually to a couple of KPIs we've set to select our startups. So we like a lot seed and Series A, obviously.
Right, seed and Series A. All right. Okay, great. Thank you so much, Marianne. Stanley, again, over to you. What startups do you pick up which will be right for the HNI or the family you're representing? And do you also encourage the participation of the family itself?
I think, I think Mary actually mentioned it well, because I mean, there is no kind of it depends what family office it is. For example, we represent a retail family office where they are actually more happy about looking at improvement on the supply chain. For example, where they look at companies that are coming up with the Internet of Things that can create efficiency and sustainability along the supply chain, for example, so that they can actually, also like we indicated before, try to also incorporate some of those innovations into their main business verticals. Because don't forget, they also use their family office investment as a way to build innovations into their main business verticals when it works. So we look at innovative deals that are looking for Series A. They're looking for seed capital, because I mean, with those type of investment, you can actually if I can say, control the process a little bit. So mobility also is a big thing. I mean, most of the family offices are looking for mobility. So the two main things that they're looking at is mobility. And then, of course, I move towards the, if I can say, the sustainability and the impact family offices that we also look at. And for them, they're looking at any single thing that actually helps with the sustainable movement going forward, because they can actually be part of that movement and advertise them on their traditional business websites. So in effect, it really, really depends on, like, which family offices that you're referring to, but they actually try and focus on what is in line with their own traditional business, if that makes sense.
Yeah. So you actually mentioned before that they just don't want to be too much exposed. But do you encourage participation from the family itself if it's a critical deal or it's a big ticket size deal?
Yeah, of course. I think, like Gary said, the family office itself will have billions, and they would like to keep it that private. But individual investments from individuals like you, the family, it's actually much easier. Some of the kids within the families are actually willing to actually invest some of their own money into this transaction. And I've actually met 3 or 4 family offices where their children are actually co-investing with the businesses, because in a way, having the individual versus the family office, it's a little bit of a separation as well. So yeah, the kids are especially in the impact space, because they want to learn about this space. They want to actually be part of this space, and the family office gives them the opportunity to actually co-invest in some of these transactions.
Interesting to know about that. Gary, your insights, please.
Yeah, no, Stanley's right on the target. It's really interesting. It's a fascinating world. There should be a TV show about family offices, because it's like dealing with the horse shows here. It's the people that attend. It's an incredible world, and so it's from my perspective, family members, the people that are icons of industry. And they, just from my perspective, they love artificial intelligence, the ones that I'm dealing with, almost across the board, because as Maren said, data is a fuel, but AI is a new electricity. So we need those companies. They understand they don't want to be dinosaurs either. If they don't innovate, they die. So they're looking for incredible technologies that could supplement it. And if it is a retail business, what kind of things for the supply chain or merchandise planning, what kind of things could really, especially now, right, with COVID. So they're looking for innovations that can streamline their business. They're looking how they can be competitive if it's in the retail space with companies like an Amazon. In my situation, they're enormously interested in quantum and AI. It's just unbelievable, because they understand the world's going to change in the next 20 years. Unbelievably changed. Think about it. With all the data, I mean, the amount of data, as I've said many times, there's 40 zettabytes of data on the planet Earth. That's enough to go back and forth the moon 29 times and growing at 67.8% per year. Well, think about it. We got a challenge with data. So each one of those family offices have to say, if they want to maintain multi-generational wealth, how they're going to participate in understanding this data, and how's their company going to benefit from it. So that is what I'm seeing. And I'm seeing it, and I'm in a couple of the groups. Like I said, I'm a tiny minnow compared to these blue whales. But it's interesting fascinating. It's like being a fly on the wall, just listening. And the way they make the decisions is more, from my perspective, anyhow, more from the passionate standpoint, right? They do it based on passion. And once one of them vets you and you get in, it's a whole lot easier to work with them, of course, right?
Yeah.
It's like my partner. My partner's a billionaire. My partner, Neva's a billionaire. He's from Russia. He's in Silicon Valley. He's a genius. He's got 9 companies he started. We started a company together. And because of him, I met a whole lot of, families and family offices. And so it's getting in is the hardest thing. Once you get in, and now, you got to have some success. People aren't going to bust in, unless they're, they're making money and they're successful. Well, in the impact and sustainability, sure. But I mean, in general. So you got to have something that's really cool, and they can say, listen, they've had a couple of successes with you, and they're a whole lot more interested in putting their money in. It's almost like I was watching the thing on Netflix about investing in art. Once somebody starts getting a Pollock, everybody starts to invest, right? It's like, oh, this is interesting, and it changes. So, yeah, getting in is a big thing, and having a show just like this, Sonny, where you got Aaron here and Stanley here, is a great thing because it gives you insights. I think that the family offices, quite frankly, they do want to find deals too. Yeah. So for them, it's hard too. It's not so easy for them to meet the people that have those deals. So it's it's finding those connections for them too, because they want to be right on the cutting edge of it because they want their multi-generational wealth to go up.
Absolutely, absolutely. Thank you, Gary, for those insights. That brings me to my next question. How do family offices allocate their capital? We're not talking about startups alone, but generally, how do they allocate their capital? If Maren can take this question.
Oh, that's the most difficult question, actually, because Stanley got it to the point and Gary got it to the point too. So it's not only the family office. So I'd like to start off with something else first. Schweizer family business started in the cuckoo clock business. That's the cuckoo thing, clock business. Right. We wouldn't be around anymore if we would have believed that the clock business is the business forever. So there have been a couple of innovation steps during that 170 years old history of Schweizer electronic, which is separate from Schweizer World, by the way, from the family office. So now for digital, and that's my point, we invested in a lot of digital businesses. It's been a learning curve for ourselves because we wanted to start to understand how is data working, how is digital really working, what are the drivers, how can you create a value proposition, and at step 2, how can you bring that Horizon 3 investments into a Horizon 2 deal, combining it with our more major businesses. So it's always look out Horizon 3, and that's the answer, to then moving into Horizon 2 to have a synergy play with Horizon 1 businesses.
Right. Wow.
Great. We are looking at anything else. It really depends on the value proposition of the startup, a convincing team, a team that can run the show, and where we have a good feeling and click. We also need that personal click.
Right.
The business KPIs.
Great points, Maren. Very helpful. Stanley, your insights.
Yeah, I mean, family offices, like also most of the investment firms, where they also look at full portfolio activation. I mean, they do have other instruments like listed instruments and things like that. But the main focus, you find that 70% of their investment instruments are focused on the private equity space. Right. So they do look at all the different types of investments, but 70% is mainly focused on the innovative, risky, if I can say, initiatives that they will actually look at. So yeah, I mean, I think for me, I think entrepreneurs who have got great ideas should actually be looking at family offices more than they actually currently are.
Yes. Yeah, sure. Stanley, you there?
Yeah, I'm still here. I don't know if my internet is slowing down. Mm-hmm.
Yeah. So I thought I saw a static version of you, so I was wondering if you're still there or not. So I missed the last part. Sorry. Can you repeat?
Yeah, I was saying that family offices, like any other investment institution, they actually have full portfolio activation where they invest in listed equities and private equities, but the main focus is on the private equity side.
Okay.
So
PE.
my whole point is that entrepreneurs should be more focused, or entrepreneurs with new ideas should be focused on targeting the private.
Yeah. So okay, great. Thank you. I'll come back with another question before let's take that insights from Gary as well.
Yeah, so I mean, Stanley's right on target. Well, what I'm seeing is I'm dealing with innovations, and I'm looking from my standpoint, they're looking at these leading edge technologies that can benefit the family. So that's what I'm seeing. And as I said, I mean, entrepreneurs should focus more on it, but there's got to be a better way. This is another startup. There's got to be a better way to be able to attract the family offices, some kind of a family office portal to show deals, right? I don't know of any that are out there. Maren probably knows, but there's got to be some way to be able to bridge the gap between the family offices and innovation. So, and that's where the challenge is, trying to get to the folks.
Exactly. So exactly, Gary. I mean, that was my next question. How can a startup, if I'm a founder, I'm looking to raise money, so how do I make sure, what are the parameters? Why do I need to go to a VC or a family office? What's the deciding criteria for me for making that decision? So
yeah, I can tell you that, and some of the family offices also, have, traditional VC firms. They invest in traditional VC firms. It's just a lot easier, Sonny. A lot easier, because it's like somebody coming to you. If somebody wants to borrow money and they go through a bank or they come to you directly and said, well, geez, it's their money. So it just, you cut down on the red tape. Just it makes it a whole lot easier, and and they're the decision making. This is like sales 101. If you're going to go sell something, who do you sell it to? Would you rather have the CEO agree to buy it, or would you rather have somebody that's on a shop floor somewhere? If you're going to impact, it just saves a lot of time, and you just don't waste a lot of time. You're going to get your answer very quickly because it's their money. So for my suggestion, if it was me, I would be on events just like this, because this is a starting point of how you're going to meet those folks from the family offices, right? The one thing I'm finding, they're pretty open. I mean, they want to find innovation. So once you get to them, they're open. The key is getting there.
All right. Thank you, Gary. I think I don't see Stanley. Maren, the question is for you now.
I think the difference between a lot of family offices, and in particular ours, and CVCs or VC firms, is that we are more hands-on. We have that wide scope I mentioned beforehand, and we are more into the venture builder. So we try to build that new innovation together jointly, chip in business knowledge, mentorships. We also, what we like to do, and I'd like to mention that now, is actually we'd like to exchange the teams. So from the more major portfolio companies to the younger ones, and vice versa, actually, to mix them up, including our own teams who are looking at the investment side. Gary mentioned one interesting thing for sure. For family offices, to get your deal flow up and running is a challenging aspect, especially if you look out into new verticals you've never been before, or new regions you've never been before. Because it's the same like for entrepreneurs, Nobody knows you. Nobody knows that you are there. It's a very private sphere. You don't want to advertise everywhere that you are around for various reasons. So it's the same challenge. You need to get your deal flow up and running. So many family offices, they are LPs in funds. They do various activities to get known and then to generate their own deal pipeline. So that's pretty much what we also did in Southeast Asia.
Right. Thank you, Maren, so much for sharing those details. I think it's very interesting for a founder, like an early stage, as you said, of Series A, to understand the benefits he's going to get by going to a VC or coming to a family office, right? It's very, I think Stanley is backstage. I'm just getting back on.
My computer got too hot.
Oh, it's very hot outside. Is it?
Yeah.
Okay. So yeah, it's a very important point, Aaron, you shared here. So it's very crucial for a startup founder looking for this, especially this time of the year, 2021. So to understand the difference between a VC and wealth coming from a family office. Thank you so much, Maren. Stanley, you were offline, you're backstage. So my question was, for a startup, if I'm a startup founder, for me, what are the factors for me to decide between a VC or a family office?
I think it depends on it depends how structured. Firstly, it depends how structured your startup is. Firstly, and also depends on how much equity you're also willing to give away. Because, like we said before, the VCs are much more, if I can say, I'm going to use your word, too structured and too rigid to enable you to maneuver. But if I have an idea, I mean, don't forget, family offices will not finance idealization as much as VC will. So you got to have some form of traction in your business before you can go to a family office. With a VC, they can take more of the idealization risk. So if you have an idea of a new technology, they will be happy to actually put in the money. But with a family office, you got to have some form of traction before you can get in there, because I mean, the family office is based on networks, and it's also based on reputational trust. So if they finance an idea and it doesn't work and it gets out there, it becomes too convoluted for them. So there's got to be a little bit of traction as an entrepreneur before you approach the family offices. But if you have an innovation that you believe and you know that there's going to be some form of, if I can say, market relevance, look for the particular family offices that their traditional business operates in the same sector, and then you can actually push it towards them. But if you have an idea and you're still trying to pilot and everything like that, then you should go to that VC. And I think that's how you make your distinction between where to go.
Great point there, Stanley. So with idea stage of VC, then if you have traction, then obviously family offices. So with that, so because with VC we have different rounds, so family offices, they also have different rounds. But family offices, the first chunk, the first check is quite a big check as compared to a VC money, I guess. Is that correct?
Yeah, I mean, depending on, and I think I think family offices, the more you are trusted, the bigger your check. And with a VC, it's more like, okay, the more the technology might work, the bigger your check. So with a family office, it's more relationship not based in the beginning than a VC where it's going to be product relevant. So with a family office, if they trust you, your check is unbounded. And if they cannot take all the risk, like Miriam and Gary mentioned, they can bring their friends along, because don't forget, all of these family offices, they know each other personally. They are friends. They are not competing like the VCs will compete, where they'll try and, if I can say, contain their ideology within their organization. But with the family office, like, hey, Jason, I just met this guy with this great product. Do you want to come in? And you go from 1 million to 20 million in a week. Where with the VC, it's like, okay, I want to take 60%. That means that I don't have anything else to share with anybody. So, you stuck with what you got.
Wow, great points, Stanley. Really appreciate sharing that. It's very useful for the founders that we have, the startups that we have, to make that differentiation between a VC and a family wealth, and decide on which path to go. Thank you so much for sharing that. Gary, your insights.
Yeah. I mean, I can tell you a direct situation. So we had an opportunity. One of my friends is a Chinese billionaire. And so there was a limited amount of money that could be put into something. And he wanted to put $500,000 in, very limited. But then he gets one of the other wealthiest guys in China on the phone. A guy happens to be a very good friend of mine, and says, "Come on, please, I want to invest $500,000." It was like, I've never seen anything like it in my life, right? It's one thing, and that, I mean, it's not a lot of money, $500,000, but it was just interesting how it went. So it is a relationship driven. They do check you out a lot more. They vet you. They look at may do background investigations. I mean, there's a whole lot that goes into it, because they want to make sure they're not going to look like a fool. But they can move a lot faster. So once they determine you're vetted, and we went through the same thing recently, that's fine. I mean, it's like everything checks out. Make sure you got a lot of stuff from the internet, because they're going to look through everything, right? And they want to be able to say to their friends, "Oh, look at who I'm dealing with from wherever, Silicon Valley or Africa or the Netherlands. Who is this person?" And then because their friends want to take a look, so that they'll start to Google your name, and happens unbelievable amount of times, right? That's how it works. It's like dealing with friends, right? It's like they want to get to know you. They want to brag about it. They want to talk about the cool thing. It's like a piece of art. What new piece did they get? and how it's going to help their collection. And so, and once you get in and you start making money and you're successful, what Stanley said about having traction and the credibility is really important, because they won't, I haven't seen them just bet on an idea, right? An early stage idea. The thing is, if you got some traction and it's proven, then they jump on. It's a whole lot easier. So that's the difference.
Right. Got it. Stanley, what's the exit strategy for family offices, and how different that is from VCs?
Sorry, what was the question again? I missed the first part.
The exit strategy.
Yeah, I mean, I think with most of the PEs, I mean, the exit strategy, I mean, they don't really think about listing. Listing is never really something on their viewpoint. I think, their exit will actually either be selling it back to the entrepreneur, because I mean, depend on the underlying cash flow. I mean, but they don't look at IPOs. I mean, depending on if it's a syndication, of course, if it's a syndication, the IPOs become much more relevant to them. But on an individual basis, they will either sell it to a PE or sell it to their friends, or they would like to actually sell it back to the entrepreneur, given if the underlying cash flow will actually support it. So I think that is also some of the less pressure, because they also don't put a time frame to it. You know what I mean? The time frame is almost determined by a trigger event in the company. And so that gives you, as the entrepreneur, a little bit more time to prepare yourself, rather than with the VCs, where you're actually given a time frame for exit, and then suddenly you have to prepare things where you're not even ready to put your product in the traction that you need it to be. So yeah. I think the exit, just put it this way, there's no timeline to the exit, put it that way.
Great, good to know the difference. Thank you so much, Stanley. Maren, your views on that?
That's how it is. I couldn't have explained it better. It's really like that. It's a flow, so it's open-ended. And then there are many, many possibilities, and they are not set at the beginning. It's timeline, so it's not fixed exit timeline, not so much fixed multiples. And then we'll just look and see and discuss how the options evolve. So it might even be so interesting that we take over the majority of the firm at a later stage, or we discuss to sell it back to the entrepreneurs if they like to and they can afford it at a later stage, or any kind of variant. So that's the answer. There is no set exit, which makes it, I think, for entrepreneurs a lot easier to focus on their business.
Right.
Than juggling expectations and spending a lot of time on expectation management and meeting set timelines.
Great points, great difference. Actually, it's a very crucial point for deciding factor, I guess, for our entrepreneur. Thank you so much, Maren and Stanley, for making that very clear.
Sorry, I'd like to jump in and comment on Gary. Now I forgot what I wanted to say. So Gary, please.
You looked so serious there for a second. I was waiting. Oh my gosh, his insight.
You have the excuse, it's early for you. I have the excuse, it's late for me.
There we go.
Okay, we can take that question maybe later, Maren, once you remember. So Gary, your thoughts, if you would like to add something to that exit strategy.
I mean, it's just there's flexibility. They're just more flexible because it's their money. It's like pretty simple. It's like going, if you ask somebody to do something, it's their money. You can make a whole lot more decisions very quickly. So the flexibility is in the system. So that's where the beauty is. So flexibility, speed and flexibility.
Right. Awesome. I think I've learned a lot about family offices, more in details today than before. I'm sure this session was very much educational for the startups as well. So with that, let me take some closing remarks. So what's your best advice to startups who are actually fishing for family offices as opposed to VCs? So Maren, let's take the closing remarks from you.
Think about it. Spend some time at the beginning of your fundraising to get into the network. And always have in mind, and that's Gary's point. Now I got it back, by the way. So make sure that your credibility is right. Yes, I can confirm that. We as family offices, and as we do that syndicate deals, invite friends and families, it's utmost important that the things are right. So there can only be one story. If you have two stories, don't talk family offices. If you have one solid story, talk family offices. And even though you don't know where to tap on, spend some time in the beginning. That would be my advice. If you are in, you are in.
Perfect. Thank you so much. Stanley.
Yeah, I think I also wanna jump on Marine's bandwagon when she says, like, if you have one story, I think as an entrepreneur, the family office should be your principal. Like, if you can get funding from the family office, you are literally given the freedom to actually continue. So I think rather than entrepreneurs always looking for the VCs, always looking for the angel investors, I do think that they have to put the family offices as part of their search mix when they're looking for potential startup entrepreneurs, because I think they'll get much further with the family office in terms of the time they need, in terms of the support they need, and in terms of the network that they need in order to actually reach the next stage.
Great insights. Great point, Stanley. Gary, over to you now.
Yeah, so if you get to one family offices, you'll get to 5 or 10 family offices. Because so once you're in, but the other part is once you're out, you're out. So remember, there's 2 ways.
Oh,
if you don't work out, there's 2 ways. You're out. So it's a closed-knit community. So what you want to do is, the way it's worked for me anyhow, is that once you get into one, you'll get into 5 or 10. And they start to talk amongst themselves, and then that gives you more. You start there's a network effect with the family offices. So the key is that first one. Remember your credibility. As we've said many times during the pandemic, write. Make sure you're visible so people can get excited and check you out, and make sure you've got some good content, whatever it is. Make sure your story checks out. Don't have 3 stories. Make sure you got your story down, right? And it's the right thing. And if once you're in. So the key is getting to that first one. So I would say any kind of a pitching event, place where you can get some exposure, figure out where those family offices are. Just like with Marin, the last name and the name of the company, if they match, check it out. If it says DuPont and DuPont, check it out. Schweitzer, check it out. Because the chances are you found the key, the holy grail. This is simple, stupid. You don't have to be a rocket. I'm a country boy. I mean, it's like, these are basics.
Yeah, I like that one.
So that's it. I mean, and go out and develop those relationships. Listen, it takes some time to develop a relationship with a family office. It doesn't happen over, one meeting. It happens over time. It takes some time, but once you're in, you're in.
Great. And the last name and the company name should match.
Yeah, exactly. Well, it doesn't have to match, but
if it does.
Yeah, exactly. If it does, you hit the jackpot.
Exactly. That's what. Thank you, Gary. So if you're in, you're in. But if you're out for good.
If you're out, you're way out. And remember, when you're out, don't try getting back in, because nothing good's going to happen.
Right. So point noted. Thank you so much for making this very interesting, informative, and fun as well, engaging. We had three speakers today, but I had a lot of fun and a lot of information to take back on. That brings us to the end of the show. Thank you so much for participation. I love to have you back on another show. Till then, audience, keep watching VCTV. I'm back tomorrow again. And take care of yourself. Bye-bye.
Bye-bye.
Bye.
Bye, Stanley. Bye, Gary.
Bye-bye.